Hi guys. Today we will analyze Chipotle Mexican Grill stock, and calculate its intrinsic value using two different valuation models. Enjoy! Hit the like button and subscribe to my channel if you want to see more videos like this. Technical analysis. The stock has been an average performer in the overall market. Also recent evolutions are not positive, both the medium and short-term time frames give negative signs. The long-term trend is still negative. We need to see a little more continued positive action to make this really interesting. Strong support level is around $1,300. Next support levels are around $1,200 and $950. Strong resistance levels are around $1,600 and $1,780. Next strong resistance level is around $1,900. In the last month the stock has been trading between $1,296 and $1,616 range, which is wide. It is currently trading near the high of this range. It may be a good idea to wait for a pullback before considering an entry. The stock has been locked in a downward channel since September 2021, be careful with the stock. It may drop lower. Intrinsic value. Buy low, sell high. We have heard it many times before. But how to know when it's low, and when it's high? The intrinsic value of a stock is its true value. It refers to what a stock is actually worth, even if some investors think it's worth a lot more than that amount. Intrinsic value is important, because it can help investors understand whether the cost of a stock is undervalued, or overvalued compared to the market value of the stock. Let's calculate the stock's intrinsic value. For more accurate results, we will use two different valuation models to calculate the intrinsic value of the stock. Discounted free cash flow model, using the formula below, then, valuation based on earnings per share, 5-year average P/E ratio and expected growth rate. First model, discounted free cash flow valuation. This spreadsheet contains some financial data that we will use for the stock valuation. We see that the average revenue growth rate of the stock has been around 14% per year, for last 5 years. We see that the average profit margin of the stock has been around 6% per year, for last 5 years. Also we see that the average free cash flow to net income rate of the stock has been around 131% per year, for last 5 years. And we expect 8% per year average stock market return. Now, let's consider 3 different scenarios for Chipotle Company: bad, average, and good. First scenario. Chipotle will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be a low, 10%. Future profit margin would be a low, 4%. Future free cash flow to net income rate would be a low, 80%. In this case, the fair value of the stock today would be $229. Second scenario. Chipotle will have average performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be average, 12%. Future profit margin would be average, 6%. Future free cash flow to net income rate would be average, 110%. In this case, the fair value of the stock today would be $442. Third scenario. Chipotle will have high performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be high, 14%. Future profit margin would be high, 8%. Future free cash flow to net income rate would be high, 140%. In this case, the fair value of the stock today would be $752. Second model. Valuation based on earnings per share. This spreadsheet contains another financial data that we will use for the stock valuation. The current earning per share price for the company is 22.91. Minimum rate of return. I will use 12%. Because when we invest in individual stocks, we are looking for a higher return than the S&P 500. For Chipotle, analysts forecast growth rate around 14% per year in next 5 years, and future P/E around 48. Again, I will use 3 different scenarios for Chipotle Company: bad, average, and good. First scenario. Chipotle will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be a low, 10%. Future P/E would be a low, 16. In this case, the fair value of the stock today would be $312. Second scenario. Chipotle will have average performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be average, 12%. Future PE would be average, 20. In this case, the fair value of the stock today would be $458. Third scenario. Chipotle will have high performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be high, 14%. Future PE would be high, 24. In this case, the fair value of the stock today would be $645. As you can see, today the stock is overvalued, $1,523, even if we expect the company's high performance in future. Chipotle scores good points on both the profitability and health parts. This is a solid base for a good stock. The stock shows good growth, but it's very overpriced at the moment. I will put the stock on my watch list when it drops below $1,000, and I may consider buying the stock if it drops below $800. Company strengths. Chipotle Mexican Grill operates more than 2,000 restaurants. It offers quick service, but maintain traditional cooking methods and utilize high-quality ingredients. The company has been expanding rapidly in recent years as interest in Southwestern food has spread throughout the United States. Chipotle has a healthy balance sheet along with robust mobile ordering and delivery platforms that will help it to recover as the economy reopens. The company has no long-term debt and strong cash flow, which should be sufficient to meet its capital spending requirements. Its strong brand will continue to attract customers. Chipotlanes, a drive-through digital order pickup lane, are expected to be included in more than 60% of new Chipotle restaurants. Chipotle's return on assets of 10% and return on equity of 28% are amongst the best returns of the industry. Profit margin of 9% is better than the industry average of 4%. Based on estimates for the next 5 years, Chipotle will show a quite strong growth in revenue and in earnings per share. The revenue will grow by 14% on average per year. In the coming 5 years, the EPS will grow by 25% yearly. Risks. Chipotle Mexican Grill has been hurt by restaurant closures due to the pandemic. It has also been hurt by a spate of food safety issues over the last several years, and faces substantial risks related to outbreaks of foodborne illness. The company also faces significant execution risk due to its rapid expansion, and its margins could contract if it is unable to purchase food and beverages at reasonable prices. In addition, the company operates in one of the most competitive segments of the already competitive restaurant industry. Thank you for watching. If you found this video helpful, please hit the like button and subscribe to my channel.